Welcome to Wall Street Unfiltered. We're going to throw the mainstream gloss out the window. Welcome. We've got a huge show today, so I'm just going to get right to the point, which is always the best and most logical way to proceed. First up, Brad Katsuyama. Okay, there's a movie that might be playing in a theater near you about high-frequency trading. Brad Katsuyama reveals the actor who he would like to play Brad Katsuyama, but in typical Brad fashion. It's very humble, but a much more interesting conversation about where we are relative in HFT. We've seen the Department of Justice file some criminal charges. We've seen the SEC get tough. I mean, we've seen some really strong action, but what has it done? Brad Katsuyama has an interesting take. Then Bill Ackman came to Chicago. He's in a church. It was a fascinating event. I mean, that guy, I'm going to tell you something, he is shaping public opinion. It is stunning what that guy is doing. So we talked to Bill, there's an interview, and then provide some analysis, because I think in terms of activists, we need to take stock at what's going on, because something very unusual is happening. This strategy is just taking off in some unprecedented locations and to some unprecedented links. So let's just take stock. Brad Katsuyama is the founder of IEX, and this is a stock trading venue that was established with one goal, and that's to create a fair and equitable method for professionals to obtain liquidity. He was famously featured in the book Flash Boys by Michael Lewis, which focused the spotlight in a most unusual location because no one was really paying attention to this beforehand: high-frequency trading. While it sounds complex, Lewis did an absolutely marvelous job of simplifying and making interesting a complex topic. And in my opinion, I think part of what grabbed the general audience was there was a small independent group of people who kind of overcame Goliath institutional resistance in an industry where influence and having the right people on your side can really matter. And so when I think you look at what Brad Katsuyama has accomplished, it's pretty amazing. And as Michael points out in the book, Brad is an unlikely hero. He's a Canadian resident of Asian descent, and there's a Sony Pictures movie in the works that's no doubt going to feature this humble institutional player who, unwittingly found himself in the middle of an industry firestorm. Welcome to the show, Brad.
Thanks very much.
So there's been a lot that's happened. We've both been in this business to different degrees and from different perspectives, but I can't remember seeing a book come along and just shake up an industry like Michael Lewis's Flash Boys did. And let's just look at what has happened since then. There have been criminal charges filed by the Chicago DOJ against an HFT trader, and the talk I'm hearing coming out of the SEC is that they're going to take a pretty stringent view on anything that is manipulative in the markets or potentially damages the security of our equities markets. Can you tell me about the big changes that you have seen take place from the point the book came out?
Yeah, I think kind of the amazing part is that some of the biggest changes are the things that are not happening. Meaning, there are certain kinds of activity that I'm sure are happening, that's happening less and less. So I think, that on the headlines, I think, some of the change is happening a lot slower than we thought it would. They're still starting to change, but as you see players move around, as you see firms drop out, as you see the landscape shift, I think a lot of, the bad behavior is starting to get deterred. Whether it's through regulatory intervention, whether it's through any of these investigations, people realizing that there's going to be some level of accountability for some of these actions. I think it's, there's no question that the market is far better now than it was 9 months ago, and I think it continues to get better.
Talk to me about some individual situations that you see in the macro market environment that need to be addressed.
Yeah, man, I think kind of one of the biggest issues is this notion that the markets are not designed in a way to consistently deliver fair prices to all participants. Part of it's because exchanges are selling fast market data feeds and selling technology that allows HFT to, high-frequency trading strategies to locate right next to their matching engines, which means someone can see a price and act on that information before someone even knows that that price exists. And I think that what it does is it creates an industry of haves and have-nots. And the exchanges respond by saying, well, anyone can buy this technology, but in reality, not everyone who invests in the stock market should have to buy millions of dollars of technology to get the fairest price. Part of the function and the mechanism of the market is to consistently deliver fair prices, and we feel like it's not happening in the market, and we've designed technology such that it is on our market.
Let me ask you a question about going forward. We've seen a lot of change up to this point, and just looking over 2015, the U.S. Federal Reserve, the Treasury, along with a number of hedge funds and quant models, say we might see some volatility coming into the markets in 2015 on a more regular basis. How are the exchanges set up in terms of market structure to handle these, and what are some of the things you see that institutional investors need that they're not getting?
I think that there is a trade-off. Once you get into very high-performing systems, there's a trade-off between speed and stability. And I think that the move has really been to create and to preference speed. And as a result, certain things are happening where you continue to see outages, you continue to see breakdowns, and I think that part of that is just the priorities of the market centers and what they're focused on. So I think that that definitely plays a role as the markets become more volatile. Even back in October, you saw a number of marketplaces having to shut down. You saw outages all over because volatility spiked, the message rate spiked, and some systems couldn't handle it. So I think that again, it's where are the priorities of the market, and if your number one priority is to be as fast as possible, there are things that you have to sacrifice to accomplish that. So I think that that will continue to be a theme until we see the priorities of the market start to shift.
Let's talk about IEX for a minute, because I know you came out with a new product that addresses some of the concerns that institutional players have. Why don't you tell us a little about where you are as a company, where you are as an exchange, where you see yourself going, and how this new order type that you're releasing addresses some issues?
Sure. So right now we're registered as an ATS. When we started, obviously we were at the bottom. We had no volume, and we've risen up to number 4 in the FINRA Tier 1 rankings. So out of 40 plus venues, we're pretty happy about that. We filed. We're in the process of filing to become an exchange, and hopefully that happens at some point in 2015, and that lets us compete directly against the New York Stock Exchange and NASDAQ. So from a venue standpoint, we're kind of right where we want to be, and we're really happy with the growth, and things are going well there. Our goal is to kind of consistently observe the market. So as a result, since we're not paying people to send us orders, you have to give them a reason to send us orders. And that, from our standpoint, that's about continuing to innovate and make the product, the market itself, make the product as good as possible. And it's always been a philosophy, and I think it will continue to be one. And this kind of latest innovation from our standpoint is just one example of that. I'm sure there will be many more throughout the year.
Talk about that individual innovation for a minute.
Sure, yeah. So what we did is we created an order type. We now have 5. This one's called discretionary peg. A number of IEX orders were trading right before the price was about to change. And we felt like that was disadvantaging people that were resting orders on our market. So we ended up creating an order type called discretionary peg that takes into account these millisecond level signals, and we prevent orders from trading at what we believe to be soon to be stale price. There's no additional fee to use this. It's the same fee. You can pick it along with any other order type, and it's just there. It's an added service for the same price.
Let me ask another question, because this talk has been around pretty much since the book was launched, and I think there are a number of people who have been watching your growth path, and I can say they've been watching with sort of eyebrows raised at how you've achieved success and you're hitting your benchmarks. So let me ask you a question I know you've been asked before. What's the end game for IEX and Brad Katsuyama? Is there an IPO in your future? I mean, particularly as you saw a lot of the large stock exchange sell for billions of dollars. Where are you guys headed?
Yeah, I think for us, it's part of part of trying to manage all that's happened, and it and it kind of in certain aspects it's almost you can't prepare yourself for kind of what happened to our team, to our company, to me. And I think part of it is just about setting short-term goals and keeping a very long-term, view. And I think the long-term view for us is just to continue to build marketplaces. And it doesn't have to just be U.S. equities. The technology that we've built can kind of do anything. You can trade any asset class. We just have to adapt it to different, geographies, asset classes. And we have a lot of different ideas on markets that we can start. But it's really just about introducing the fairest possible market into any situation that we go into. So, we don't really think about the cash out scenario. We haven't really kind of said, okay, at this point we're going to IPO or we're going to do this. I think really it's just what's in the best interest of the people we're trying to serve. That's traditional investors. That's listed companies, issuers, and we really just try not to think about the economic outcome. I think at the end of the day, if you do your job well, the economics should be there, and I think it's always been my philosophy. It's the philosophy we have at IEX, and it keeps the team focused. There's every day we come in just trying to improve the company and make things better.
Okay, speaking of making things better for IEX and expanding your visibility, there's a Sony Pictures movie coming out. Aaron Sorkin is currently trying to figure out how to write the script. So let me ask you a question. Who is your favorite either Asian actor or Canadian actor? I saw some of the things that came out. It's funny because I think it is a hard thing, right? I think it's when you think about how they could cast this movie if it ever gets made. It's a difficult thing. I think that hopefully they find. Number one, hopefully. Who's your favorite?
They keep me Asian Canadian or Asian American or something like that, but you never know. But second, hopefully they give someone a chance.
You want a new guy. That's interesting.
It's just kind of it's an odd position to be in, to be honest, and it's, I try not to think about it too much.
Well, I want to talk about Aaron Sorkin for a minute. Okay, here's how this thing is going to play out. The Big Short is going to be the first movie. Now, financial movies have done pretty well when they're written to get the bigger picture. And, I think this is going to be a challenge for Aaron Sorkin. I think he's going to test his writing chops with this movie because I think there's a story in here. You look at Michael Lewis books, they're David and Goliath stories. And I think, coming from the inside of the financial services industry to a certain degree, what you did was absolutely stunning. I mean, the fact that you pretty much challenged the establishment and won is, a one in a million kind of a story in and of itself. You and I in the financial services industry can understand that. I don't know that Aaron Sorkin sort of gets that same story, but I hope that The Big Short is done well, and your movie will be after The Big Short. So what I'm hearing from you is that the actor that Brad Katsuyama wants to play might be a new actor. Give someone an opportunity. Give a new actor an opportunity. Is that what I'm hearing?
Yeah, I mean, I think that there are obviously a lot more American or Canadian-born Asians than there have ever been. And again, I see a lot of them. I just watched The Maze Runner the other night with my wife, and there's an Asian actor in there that he did a pretty good job. So you just never know. But the amazing part is that when you talk to talking with Michael was just a great experience. And part of this, as much as technical as the book is, it's also just a story about people and relationships and incentives. Because at the end of the day, people talk a lot about the companies and they talk a lot about Goldman Sachs and how Goldman Sachs turned. And I focus more when I talk about it. I focus more on it's not about Goldman Sachs. It's really about the people that work at Goldman Sachs. It's a company in the service industry. I built out of nowhere, really, from scratch. I built very good relationships at a company, but I had trust in the people, and the people happen to work at that company. And I think that there is an underlying story here that's a bit more personal. And hopefully, when you try to turn a very technical subject into something for the mainstream, people focus a little bit more on the macro issues and less on the technicality. I think the technicality, that's kind of where I see, my wife's eyes or my mom's eyes glaze over and you really get down to the details. But I kind of agree with you. I think that there's a real story here, and hopefully it's told in the right way.
Yeah, it's also interesting. What I'm about to say is not going to make me popular with certain people, but Goldman Sachs. I know people who work at Goldman Sachs who I think are really great people, and so I know exactly. Even J.P. Morgan. There's some great people there. I hope that the movie accurately portrays the situation. I think you guys have an interesting future ahead of you, Brad. All the best luck.
All right. Well, thank you very much. Appreciate it.
Take care. Okay. Aaron Sorkin, I want to give you a little advice. These are just suggestions. Number one, I want you to do something that is socially beneficial in your career. When you look at Flash Boys, I want you to dig back and go to A Few Good Men. And remember the point, you can't handle the truth? Guess what? I think it's time that the American people got a little bit of truth. And they see what's on the inside. They see a fight for justice. They see a fight to preserve fair markets. They see a fight of independence. Little David's against a Goliath. You need to produce a hit that is socially significant. Okay, on to the next topic. Bill Ackman. He came into Chicago recently, and it was sort of a fascinating experience. Okay, I'm just going to say that, in my opinion, Ackman is an impressive individual on several levels. But what doesn't get the same credit, and I saw it here in Chicago at this church, is his team. What I witnessed at this somewhat rundown church and really sort of working class neighborhood in a Hispanic section of Chicago on the southwest side was an operation that was working to shape public opinion and campaigning not only for what they thought was justice, but they were campaigning for a profit at the same time. And it was a slick operation. I think he has a little more work to do. I think that he needs to get that message that I saw in that church out to a wider audience. And I think with the team he has in place, he's got some pretty impressive people to do that with. This is a type of hedge fund trader I've never seen before, because he's not only just calling a market direction, he's calling a market direction and he's trying to influence that direction. So before I get ahead of myself, let's just get right to the interview. And here's Bill Ackman in Chicago, and there are a couple points I want you to watch for. I will stop the tape and put a couple thought bubbles in as the action occurs.
Kill that light, it's driving me crazy.
You recently donated the $10 million to charity.
Yes.
Can you tell us how much have you made on your Herbalife bet?
Nothing yet. We're on just at the margin where every dollar starts to become meaningful. If it drops from here to zero, we'll make about a little more than $1 billion.
Did you say you've made nothing so far?
Yes. I mean, actually, we shorted at 47.
Yeah.
But because of option premium, borrowing costs, dividends, investigative expenses, our break-even is around 31, 32.
Okay. And you've said before you expect the stock price to go to zero. When do you see that happening?
Hard to conclude the timing, but I think it's sooner rather than later.
Yeah.
I'd be surprised if it's not gone within a year.
Really?
Yeah.
Okay. And how big is your bet on Herbalife? So
I mean, effective value today is about $1.2 billion, around that.
And did you learn something new today from having this town hall meeting, or what do you take away from this experience?
Well, I mean, it's hard to listen to the victim stories without. I mean, I've heard victim stories, but not firsthand.
Yeah.
Or only a few firsthand. I mean, these are very moving. I just don't know. I mean, how you can listen to this and allow. It's an embarrassment to the country that this company exists.
Yeah.
Right. And by the way, it's not just unfortunately in America. It's in 90 other countries. So it's a certainty it will be gone.
And my last question is, I just want to know, how do the church is chanting that you're their amigo and they're calling you their hermano. How does that make you feel?
It's kind of sweet. It's very sweet. Very sweet.
Okay.
And I'm going to help.
I want to ask you some non-Herbalife questions.
I don't want to talk about anything that's non-Herbalife. So if it's Herbalife related, I'm happy to answer. Otherwise, you can call me another day.
Okay, this is Mark's thought bubble. So let's take a break here. First off, that's Tom Polanski from Reuters asking the questions. He's very good. If you don't follow him, you should be. And he nailed that first question. That's really what matters most. I'm just doing some rough math on Ackman's profit and loss model. It seems a little odd that he's not making money until this level, particularly shorting up around 47. I might suggest that the next time they assign a time premium value to each month and adjust time decay exposure based on what the probability they think of the stock going to zero in a given month. I'll give you, as an example of this thinking, early in the cycle, the probability of the stock going to zero is not very high. Even right now, I wouldn't call the probability of the stock going to zero at a high probability, just off the top of my head. But as the year 2015 unfolds, I think the probability is going to increase. I think that should drive how you position your strike prices to a certain degree. I think some spread should have been an interesting call in the mix to ward off premium time decay. And some single stock futures would be interesting as well. These are some topics I wanted to touch on with Bill, and I got shut down totally. I had 3 questions I wanted to ask him, and I wasn't able to ask him. So I had to switch gears real quick to Herbalife, which I did. So I'm going to get right back into the story. Let me ask an Herbalife question.
Sure.
Who's going to put the final nail in the coffin? Is it going to be regulators, or is it going to be due to lack of sales growth?
I think it's a contest. I think the market is on its way to shutting down the company.
So you think that's going to happen before regulators?
I think it would be an enormous embarrassment to the regulators if the company collapses before the regulators have done their job. So I think as the stock price goes lower, it motivates regulators to accelerate what they're doing. As the regulators accelerate what they're doing, the stock price goes lower. The transparency that's been created around Herbalife makes it much harder to recruit. You know that little video we played?
Yeah.
We're going to make sure that goes viral on YouTube.
Well, you're seeing the sales declines already. That's a
You're certainly seeing the sales declines. The company also, with all this scrutiny, has had to crack down on some of the most egregious practices. There's still a lot of bad things going on. But as they crack down on the worst distributors, the sales decline. And pyramid schemes are inherently unstable. Right? If you're going to be a fraudster, there are other pyramid schemes you could go to work for rather than this one. And I think that ultimately the company will fail on its own, but I think that would be an incredible embarrassment to the regulators.
Was your last video where you exposed the inside sales tactics of Herbalife, was that the nail in the coffin?
I think it's an incredible document, right? Here we have 3 hours of video of a top Herbalife distributor with current senior vice presidents and a board member in the room talking about how it's a fraud. I mean, I just find that. I mean, what's your reaction to that?
I thought that was the seminal point.
Yeah. So it's a matter of time. I'm amazed it still exists.
Yeah.
But I was amazed it existed when I first got involved with it. I said, how can this possibly be?
You're having a charmed year in 2014. What's going to happen in 2015?
Who knows? I think Herbalife's going to disappear.
2015.
I hope so.
All right, there we got our timetable.
Are you going to do more of these town halls, like around the country or something?
We'll see. I was invited and I showed up.
Yeah.
So let's see if I get invited.
Any political ambitions for you? This is very election-like.
Annual.
Is that a compliment?
Yeah, that's a compliment.
I have similar hair, I think is what you're trying to say. Look, this is this is a very, very important issue.
Yeah.
And what's nice is we can make money for our investors and do good for the country. So that's a win for me.
Okay.
All right. Thank you very much.
Thank you.
Otherwise.
Okay, so I said I had questions for Ackman, and the questions I had, some of them centered around the activist industry itself. You know, in particular capacity. You hear that a lot in managed futures. You know, what's the capacity of a particular market? Because some markets can't really handle a lot of the bigger funds. So their capacity constraints are an issue. How many Bill Ackmans can there be in the world? Hedge fund managers always want to know how easy is it to replicate the strategy. I want to make a point that I think that going forward, I think there are only going to be a few elite strategies. I think, maybe a handful of strategies. I don't think there is room at the very top end of the activist hedge fund space for more guys like Bill Ackman. But I also think it's very difficult to attain that level. Because don't forget, not only do you have to have investment skills, but you also have to have the contacts, you have to have the reputation. To be an activist, you have to be a player, and it's very rare to see that in and of itself. And then for someone who has attained that level of accomplishment, to understand it and then to understand how to use it. I'm going to make the argument that Bill Ackman knows the strings to strum. It's going to be fascinating to watch this going forward. Okay, let's transition, talk about a couple topics here. This is going to be rapid fire, so excuse me for just being brief and to the point. All right, first off, GoPro. The hedge fund talk that I was hearing is watch for good Christmas sales, then they really need to turn it into something. He has an opportunity here. He's got to make it happen. Competition, which the hedge funds were talking about back in September, wrote the article about it. The competition is here. Apple's here. There's going to be other competition. So this is going to become more of a commodity. It's going to start to play into that sort of a returns profile. So keep an eye on GoPro, and he's really got to turn that into something different. Otherwise, that's going to start to head further south, is some opinions that I've been listening to. Tesla. Tesla, don't forget, is primarily a battery play. We wrote about the $200 per share valuation. That was in Value Walk. Goldman Sachs had a 210 valuation, so came down to the value level and then bounced, but the price of oil is a variable here. If oil continues to stay low, the demand for the battery play just isn't going to be quite the same. So we might not see the same type of wild momentum trends that were just very beneficial to a number of managed futures trend followers. As a matter of fact, I just want to point out, it was managed futures trend followers that first identified Tesla down at 50. They were talking it up on CNBC. So, managed futures has been behind this, but I think the trends in Tesla might start to weaken a little bit. It's not going to be the same trend following stock that it was. Next topic, ECB. Swiss National Bank, SocGen, oh my gosh, the Luxor managed account platform, those guys nail stuff on a regular basis. Love SocGen analysis, and so essentially they point out the value play here. At the end of the day, the ECB has a lower value than does the Swiss currency. Okay, 40% was also the amount in the balance sheet that the Swiss National Bank had vaulted ahead of the ECB. So fascinating stuff there, and kudos to SocGen and Luxor for nailing it once again. There were winners and losers, and the SocGen Luxor report noted them. One fund, a mathematically based fund, I'm going to make the assumption, was into the Swiss franc on a long basis by 15% of their exposure in a portfolio. Now, I want to tell you something. That is an unusual portfolio balance level, because normally the Swiss franc would not be garnering 15% of a portfolio. So anyway, interesting stuff on the Swiss franc. Kudos to the funds that got it. The funds that didn't get it, managed futures apparently fared very well. New Edge CTA index is up just over 2% intra-month. Nice job. But there are hedge funds that got hurt on this one. So it's going to be interesting. The CFTC Commitment of Traders report, as pointed out by a Reuters journalist, was pretty negative. There were a lot of hedge funds that were short the Swiss franc, and it rocketed to literally that kind of standard deviation move is something that you rarely see.